What is going on, YouTube family? Welcome back to another episode where we're going to be talking about day trading, string trading, the NAS100. Because normally I would say welcome back to another NAS analysis video today, right? I think we're doing a little bit more than that. It's more of a concept in regards to how to actually position yourself in the market. And when I say how to, basically how I am positioning myself in the market, and some of those ideas I'm going to be sharing with you in this video, it may or may not resonate with you, because once again, the aim of this channel, or the aim of the content I create, is honesty in terms of what I share with you, right? So it's important that I say this. I am not a financial advisor. I'm not giving you financial advice. I'm not professing to say that I'm some kind of guru. I know it all. I've got it all figured out. Please follow me. No, I'm not saying any of that. What I am saying is that this is how I like to navigate the market. I think the ideas that I'm using to navigate the market it's a good idea. It still needs a little bit more work. That's why we have this channel. So obviously I can get your feedback in terms of how I'm navigating the market, and then you can add your thoughts in the comment section as to if you think the concept is solid or if you think the concepts aren't solid. Right? And if you're new to this channel, make sure you hit the subscribe button, turn on the notification, and drop us a like. It will really help us out, help the channel grow, and help us reach more people, right? So with all of that covered, we're going to get straight into it, right? So if you're new to this channel, this is the first time you've ever stumbled across this channel, because obviously the thumbnails is kind of bright, so you might have clicked it, right? What I normally do, my trading style is this, right? I look for weekly lows and weekly highs to be taken out, then I make a decision in regards to how I'm going to be doing business. So just to give you a bit of a recap as to what it is that we've been doing, right? Just to give you a bit of a recap as to what it is that we've been doing, because we've been doing this channel for a little while now, okay, right? So everything that I'm talking about is not brand new. The information is out there, okay? But a lot of the times is a lot of people that are sharing content as to how to trade the market, they have a different view in terms of how they move in the market. So a lot of them might use a lot of indicators and all of that cool stuff. I personally, I don't use any indicators. I use basic indicators that don't lag. So we're working off information in the past, supposing to looking for information as to what is actually taking place in the market, right? I prefer that way than using, say, I don't know, the moving average, which obviously lags. So you might think it's going to do something. You might think it's going to give you the signal that you're waiting for, and it does not do that, okay? And then you might have entered a trade prematurely, and then naturally, obviously, you get stung because you've entered a trade prematurely. So what I like to do is use past data to navigate the future, right? And I do that by using the weekly highs and the weekly lows to help me navigate what side of the market I need to be on, if I need to be on the bullish side or if I need to be on the bearish side. Okay, so just as a general recap, as we go through these charts, and all the lines that you're seeing here, the weekly high, weekly low, weekly high, weekly low, these are all in videos that you can go back through my video library, and then you can work out how we assess all of those, right? And the same thing that we've been doing all the way from back then is what we're going to be doing now, and this goes back a while, like literally goes back a while, right? And there is a specific type of concept that we're looking for, which is we're waiting for weekly lows or weekly highs to be taken out, okay? So an example, I'm just going to pick somewhere random in the market, right? Somewhere random in the NAS100 right now, just to use as an example as to how we're navigating. So we're going to use this area, right? So over here, we have the weekly low. Over here, we have the weekly high. My concept is this, right? If the weekly high is taken out, right, it basically means that we need to think about being on the side that the weekly high was taken out on. So in this case, the weekly high was taken out, right, supposing to the weekly low, so we need to be looking for buys, right? So for example, you've seen this move, you've put your buy right here, boom, okay? You go through the week, okay, let me just make this thing a bit smaller. Okay, so you go through the week, up and down, up and down, up and down. You get to the following week, right? Get to the following week. Now this is now the key point. This is now the weekly low, and this is now the weekly high. Okay, so what happens? Weekly high gets taken out over here, right? So we know there's a high probability market is still going to go up because the weekly high has been taken out, right? So what we do is we look for buys. Now this is where additional skill needs to come in, okay? Because as you can see, if I zoom in close in this area right now, okay, if you took the entry on the weekly high, so say you took this candle over here, okay, you would have been in drawdown, right? You would have been in drawdown, okay? And some of you would not have been comfortable with that, because depending on the budget that you're working with, your stop might be quite tight, okay? And because of that, you will end up being closed out. The actual logic as to how to place your stop when you're using the weekly lows and the weekly high is to cover the previous weekly low. So in this case, if you wanted to buy in this location up here, you would need to use this weekly low as your stop loss, not this one, right? Because this one will only become important for this week, right? And then once we get to this week over here, this is where you can bring the entry that you made over here with the stop that you have over here to this level right here, okay? And then as we go through to the following week, the week after this one right here, so this is where you place your trade, okay, right? This is where now you have your stop, okay, right? And this weekly high has now been taken out, okay, right? You would then look for another entry. Now, as you can see here, there are some instances where the weekly highs and the weekly lows will go against you. This is the case right here, because say for example, you've got your stop right here, okay, right? And the weekly high has been taken out over here, okay, right? You're going to be in drawdown. So you're going to be sitting in drawdown, right? Because obviously you've entered up here, right? You might have entered again around here somewhere. The smart move is to wait for it to come all the way down, but you might have entered in somewhere over here somewhere, okay, right? As the week moves on, you now enter into a drawdown stage. So you're now in drawdown, okay, right? Week ends, new weekly low is set over here, okay? Now, as you move forward, what happens? That weekly low is now taken out, okay? That weekly low is now taken out, right? So your stop has now been triggered, and then guess what? It flies all the way up, right? But however, before it flew all the way up, guess what it did? It crossed a weekly high, right? And this is what market tends to do, right? And like I say, the system that I use is not foolproof, right? As I have just shown you, with all honesty, there are situations where it will screw you over, and this area here is one of it. So that trade here, that trade there would have ended in disaster for you following the weekly highs or the weekly lows being taken out. But ultimately, it had to cross a weekly high or a weekly low properly, and then you got a massive, massive gain, right? Where I believe you probably would have made back your losses plus a little bit of a profit on top, give or take, right? So this is what we discuss on this channel, right? And now that I've covered that part, I'm going to move forward, and then we're going to look at what took place last week just gone and how we need to position ourselves for this week coming. All right, so this is more of a swing trade, day trading strategy, right? And it works really well if you're working a full-time job, right? So essentially what this system will allow you to do is that it will allow you to continue to do what it is that you're doing without spending too much time staring at the charts, and hopefully it should help you in managing the psychology of how you handle your trades moving forward, right? That's the general idea, because you place one trade somewhere in the week, right, based on the fact that certain conditions have been met, and once these conditions have been met, you then lock it in and get off the screen. Simple as, right? So with that covered, we're now going to get into where we need to be. The assessment for last week, right? So not last week, but the week prior to that, right? That information here is what I use to place trades for this week just gone, right? Okay. And the assessment I'm going to do right now with you is also going to determine how I need to place trades for the week coming, which is all of this area. There's no charts, there's nothing there because nothing's taking place yet. Okay. So if you go back and you watch the last video, I talked about what I've always been talking about, the weekly highs and the weekly low. So for example, the weekly high was taken out on Thursday last week. This is it right here, right? So I waited a little bit, right, to see what price was going to do, and price didn't come below this level over here, so it didn't come below the weekly high, okay, right? And it crossed the weekly high around 4 in the afternoon, right? So it crossed 4 in the afternoon. I was still busy at work, so I wasn't really paying attention watching the charts. But when I was on my way home, so say I was on a train and I had the time to obviously look through my phone, as everybody does. We're all looking through our phones these days, right? I could see that price was building up in this area over here. So I was like, it might actually pull down further, so let me just wait. Let me just put a pending order at this level before I go sleep, and then we'll see what happens in the morning, right? My stop loss all the way down here somewhere, just below these things over here, right? And I entered in roughly around here, and let me zoom in because I think I'm going to need to go into a much lower time frame to explain why I took the trade in the way that I did, right? Okay, so essentially what I did was this. It was really simple, right? It's really simple. That's what I mean. So it was really simple, but it is important that I say this as well, okay, right? In order to effectively use the weekly highs and the weekly lows as a system, you're going to need a fair degree of understanding as to what happens in the market. All right, okay? This is not a plug and play system. I promise you, it's not a plug and play system. If you do not know what it is you're doing, if you do not understand price action on the level that you're supposed to understand price action, you're going to screw this up, and you're going to get more trades wrong than you are going to get right. There is rules to this, okay, right? And these are rules that I'm leaving you to go out there and discover by yourself, because there's no such thing in this world as a free lunch. However, I will provide you with the rod, but you are going to need to find the fish bait yourself, right? And then you're going to go out there and catch the fish. That's how it works. That's how everyone in this industry is doing business. If anyone tells you they're telling you everything, right, even when you pay them, they're not. They're not. I promise you, they are not doing it, right? So what I did was I went into the 15-minute. I know there's a lot of rant going on here, but the idea is to serve a purpose. So I waited for, so I went into the 15-minute chart, okay, and then I drew out levels of the low of the opening of the market. So we're talking maybe Tokyo session, okay? And then I also covered the high of that session, right? And then we went through the day, right? So one thing has taken place already, right? One thing has taken place already that I know is working smooth, right? Which is the weekly high has been taken out. I've woken up in the morning and I've seen that price has gone into a consolidation, so it's ranging at this level, okay, right? Price then flies down. I do nothing. I do absolutely nothing, okay? And then when price flies down, I'm like, you know what? I want to catch the trade as it's rising up. So do you know what I'm going to do? If price, now the price is broken through this range, this 15-minute range, if it comes back into this range again, okay, right, I know that there's a good chance it's going to start to fly off again. So I stuck my trade right in this zone right here, in the middle of this range, okay, and I didn't cover this area here as my stop loss, right? What I did was I covered the previous day, the low of the previous day as my stop loss, which is a big stop, by the way, right? So my stop is down here. No, sorry, that's this week. Nope, my stop is down here, right? So it's a massive stop. I'm covering the previous weekly low. Reason why, if it goes below this, I know price is turning around, and somewhere in between as price is flying down and I'm in drawdown, I may want to do the sensible thing and jump out early rather than wait for it to go to this level down here. And at this point, when it's doing that, right, it's going to present itself different types of market structures. It's going to let me know that I need to maybe consider jumping out. So for example, if price starts drawing down and it's creating lower highs and lower lows as it is going down, I might want to think about jumping out. And how I would normally do this is I would look in this direction, so the previous week, and I'd be like, okay, what is actually sitting in that zone that may screw me over? Okay, so the first thing is I get a little bit of reassurance, okay, because I can see there's a bullish FVG right here. Okay, so I'm like, you know what, this is going to be my mental stop loss, right? So ideally, price should bounce off this zone if it pulls back. So remember, this is where I put my trade, right? So we're in Thursday right now. So I'm like, if price should pull back, it should pull back into this zone right here. Okay, if it pulls back into this zone right here, there's the FVG right here. Okay, and although this FVG has been tapped a few times, it gives me that sense of reassurance that there is a possibility, a high possibility, that it will bounce from this level back upwards again, which basically means if I want to, I could then add in another trade at this level to make up for the losses that I've made in the drawdown of price coming down this way. But however, I do need to keep my stop below this level, and if it closes below this this FVG zone over here, I've got one or two things I need to do. Either I need to manually go in and close this position out, okay, right? Or if I have absolute faith in my trade, I will hold on to it, right? So that's why we locate certain things in certain locations, just to help us reinforce the idea as to confirm if we actually are on the right side of the coin. So I locked it in on Thursday. So as it stands right now, I'm in profit. Right? I'm in profit in my trade. I left my trade running over the weekend because there's a couple things I used to do in the past that I'm now thinking that it might be a good idea just to kind of put a stop to it and not be so, how's the word, fearful of the decisions that I make. I got to be more comfortable with the decisions that I've made, right? So I got to believe in the trades. So how it basically ran for me is I've done one trade for last week that I'm still sitting in now. I may add another one for this week coming, or I may not. It just depends. But I am in profit right now because I've locked in there. I've got all of this now, which is fantastic. I could actually bring in a trading stop to secure it. I don't have a trading stop in it at the moment, okay? But I could. And if I am going to do that, I'll do that. But if not, I mean, if I don't, then I don't. It just is what it is, right? But this is what we got going on right now. So as it stands, moving forward for next week, these are things that I'm going to be keeping an eye out for. And if you like this concept as to how I'm doing business in the market, you want to try to use the system yourself, this is how it's going to go, right? This is how it's going to go. So we have the weekly low, which is set over here. So weekly low for us for last week just gone was set on a Monday, right? So let me just add a little label to that. So that's weekly low. And then we have the weekly high that was set on Friday. Okay. And once again, if either one of these is taken out next week, right, I would then need to make a decision. So if price comes below this level over here, I'm in drawdown. It closes below this level over here, then I'm in a bad situation. Next week starts, I'm going to move my stop from where it is to over here. So this is now where my stop is going to be, right? Okay. Now, if it closes below this level, I'm done for. Party's over, and I need to kind of figure out what I'm going to do for the next trade. Chances are I'll probably put in a reverse position because this is a strong indication, not a foolproof indication, not a 100% indication. I would say a 60% indication that price wants to come down. So I will reverse my position and I'll start taking sales, and the loss that I would have incurred in this zone, I'll just have to sit on that and accept it. Okay, so let me draw out the price zones for you guys so you can make sure that if you are interested in this, you can make sure that you're keeping an eye on the right zones. So let's just bring that in. Okay, all right. So as it stands, these are the zones in question. On the high side, 17994.9 is the weekly high. If that gets taken out, happy days, more profits for me. Great, fantastic news. On the downside, 17476.1. If price closes below this level, chances are my stop has been triggered and I'm out of the game, and I now need to start looking for new positions to enter into the market. Most likely it's going to be a bearish position. Okay, so but as it stands, my current view in the market right now is I am bullish in the direction of where the NAS is going. I am only looking for buys until a weekly low is taken out. And this will be the first weekly low to be taken out to let me know that I need to reverse my position. Now, before I end the video, I want to give a shout out to, I struggle to pronounce this gentleman's name, Fakamanai? Okay, now if I got that wrong, my apologies, right? My apologies, I apologize. But this is what he said. He left 2 comments on one video. He goes, I think we also have to bear in mind that price has broken both high of the 2022 and 2023, and if it continues pushing up, the good old days are back. Then I might be wrong. This is my personal view, all the way from South Africa. Shout out to my South African people, bro. Like, shout out to all of you. Thank you for obviously being on the channel. Thank you for watching. Thank you for your support. All the love from me from London to all of you down there. Okay, right? And so I agree with that sentiment, and I think I've covered that. So we're just going to go into the next one right now, which is what I was reading. Okay, looking back in the past few months, which is November, December, and Jan, the price trend has been bullish. So I wouldn't be surprised if the market can pull back to the area of around 16980.8, which is the previous high for December. Okay, now let's take a look at that for a second. So we're looking at 1690, right? Let's see where that is. 1690. Yep, absolutely. It's like he sees what I see. So this 1690 level that he's talking about, this is the zone in question, which is a major level. Okay, right? If price pulls back to this zone and goes no further than this zone, okay, right, it is fair to assume that the party is not over. Okay, right? Because this is what we're looking at right now. In terms of overall market direction. And I think the best tool to actually help us with this is looking at this on a day. Let me get a clean chart up. Okay, so this is what we've got going on right now. All right, so look at this. It's like, do you know what? I wish there was more YouTube channels like mine, okay, where people are actually giving like information that is useful. Okay, so if you go back in my previous video, this is the zigzag that I drew. Okay, now look, price is kind of following it. It's following it, right? It's following it. So I thought I gave 2 scenarios. One was a head and shoulders, right? And it looks like we're not getting a head and shoulders, but I could be wrong. Let's see what pans out, right? Because that 1690 level is around 1690 level. It's around here somewhere. Okay, if price takes out one of these levels over here, we need to start thinking about maybe the good old days is over. Okay, but price coming down to say around this zone, okay, it could be just a standard pullback to pull back up again, right? So let's just go with the vibe of a possible head and shoulders, right? Let's just go with that vibe for possible head and shoulders, right? So price is doing what it's doing right now, but let's just go with the vibe of a possible head and shoulders, right? A possible head and shoulders would effectively mean that price needs to come back down to what my good friend has just put down. Now, I said his name wrong. I know I did, so I'm not going to try again, right? If it comes down to this zone, we're looking for where the new high point is going to be. If the high point is anywhere below this level right here, which is 18695.9, right? If it's anywhere below this level right here, we have to assume we might have a head and shoulders, and price is returning back down to these zones over here, which is what we got in 2022. All right, so my good friend, I definitely am off the vibe of what it is that you're saying, but one thing that we do know, because we've all been in this space for a fair decent amount of time, is the market is very dynamic. Market does whatever it wants to do and how it wants to do it, and what we need to do is we need to be mindful and we need to be prepared at all times to make sure we can take the best, we can make the best possible decisions when these opportunities presents itself. All right, so with all of that covered, my good people from all around the world, I want to thank you for coming over to watch another episode where we do a nice market breakdown of what we expect NAS to do. I wish you nothing but profits for next week, okay, and nothing but abundance for you and all the success with the journey of teaching yourself how to trade. And I hope the information I'm sharing with you will help you reach the level where we are all aiming for. And one day, it may not be today, it may not be tomorrow, but one day we will absolutely get there, and we will get there with skill, right? Not, oh, we hope we're gonna do 25 lots and we hope he goes up, and he goes up, and then we start running around telling people, oh yeah, I'm a trader. No. We're going to be able to repeat the process every single day, Monday to Friday, all year round, raining, sunny, snowing, whatever. We're going to be able to do this all the time without fail. It requires work. This task, this journey, this life that we've chosen, it's not an easy one. It's a hard one. It's a lonely path. And no one's going to be around to help you as you're going through the difficult time of learning how to navigate the market. But they are going to come around when they start seeing the results. All right. What you do in that time is what you do. But bottom line is this: do not give up. Do not give up. Continue on this journey. If this is for you, every loss is an opportunity to learn more, and every win is an opportunity to learn more. Don't get blinded by the dollars. Always focus on the skill, because it's the skill ultimately that is priceless. It's not how much you're making, it's how often can you do it, and can you do it on repeat all the time. And if you can, congratulations. That's the journey we're on, and we're all going to get there. And once again, I thank you for coming over to hang out with me today as I share my thoughts as to how I'm going to be navigating the NAS. And once again, if you haven't hit the subscribe button, make sure you do. Make sure you turn on the notification. Make sure you drop us a like. Help this video get around so more people can watch this video and share my concepts. And ultimately, and most importantly, leave comments of ideas and concepts in the comment box, because I want to learn too. So just, if you have anything to say, just put it in there. And if you just want to say hey, just also do that as well. Either way, I welcome all of your thoughts, all of your ideas, right? So with all of that covered, I want to wish you the very best for next week, and I'll see you on the next one. So until then, this is Pips and Points signing out.